Hello again, everyone, and welcome back to the January 2026 version of the Midtown View. I'm your host, Jim Wenk, and with me, I have my very special quarterly guest, Matthew Schreck, Tri-State New York leader for research here at Savills. And Matt, we have a lot to talk about.
I feel like we say it every time.
I know, but appreciate you just taking time from your busy day to talk about what concluded from 2025, and there's a lot of spillover, tremendous amount of spillover demand coming into 2026. But I would say the optimism meter is very high. Knock on wood, knock on whatever you want to knock on. Yeah. But would love to kind of get into how we closed out 2025 and what we have in store and look forward to in 26.
Sure. Yeah, it's a great time to be back and talking about the latest developments in the office market. It is always interesting things going on. It changes every day. But like you said, there is a sense of optimism, I suppose. Depends on your perspective, but the market is strengthening, it's recovering, and that's one of the big things I think we'll probably spend a lot of time talking about today is how this strengthening recovery is spreading and diversifying. But as far as what we saw and observed in Q4 of 2025, we tracked 11.2 million square feet of leasing activity in Manhattan, which brought the full year total to 42.9 million square feet, which did surpass the 2019 pre-pandemic peak level that we saw, which is a big moment, a big psychological hurdle to clear. It's a big moment for the Manhattan office market recovery and the real estate market. So we did meet that threshold. I know there are others who track the data a little differently across our industry, but I think by and large, everyone recorded last year's activity as roughly meeting or slightly exceeding 2019. So we made it by the skin of our teeth.
So 2019 was obviously a robust year, pre-pandemic. We had, technology was very active. Co-working was very active. We were talking about that. But then also the normal fixtures of our economy, legal, finance, business services. So we're we've kind of seen those same industries keep momentum and keep growing. And then we've been talking about the growth of the AI industry, whether it's New York based or coming in from the West Coast. So that's been very active over the last 12 or so months. We talked a little bit before we started shooting about co-working, how that's really serving a purpose. Flexible space. There's been consolidation within that industry, but it seems like it's really got its footing. And, there's a handful of big providers, and then there's a lot of boutiques and startups, but kind of every level or different industry seems to have a part in our recovery. Yes. So we beat 2019 overall leasing. We had a tremendous quarter, over 11 million feet. But why don't we, kind of go under the hood a little bit and, see what's been driving it, what continues to drive it, and do you see any changes, or in the future? And I know we have our crystal ball here.
Yeah.
How it might look going into 26.
Yeah, I really like the way that you framed it because it does seem like everything is contributing to the greater whole at this point. Whereas earlier on in the recovery, the activity was very much concentrated here along Park Avenue or in Hudson Yards. There was a lot of demand from your, high-end, large law firm users, your private equity firms and hedge funds that were very well-heeled. And at this point, it is the tech sector driven by this growing AI contingent, the business services users, the co-working users that are, slowly but surely, methodically expanding their operations, and then geographically as well. It's moved beyond Park and Hudson Yards in Midtown to 6th Avenue, Lexington Avenue, even 3rd Avenue. As that, we could talk about that, but as that market sort of consolidates, there's demand really east to west in Midtown. And then, of course, in Midtown South, very much driven by AI. But there is a real pipeline there, I think, that we could talk about of, AI companies coming into the market, maybe establishing a foothold in a co-working spot, then moving when they grow a little more to a boutique Class B style building. And then in a few cases, we've seen really upgrading to significant amounts of space at Class A and trophy buildings. So there's a real pipeline there. And then even downtown, which earlier on in this recovery had been considered sort of left behind. World Trade Center in Brookfield Place is, I would say, thriving at this point. And then it feels as though there is a real opportunity for the financial district, the buildings on Water Street, to start capturing more demand and make strides.
So what I could comment on is specifically at the World Trade Center, we have clients in those buildings, and they are extremely active. The rents are being pushed. And we know there's a lot of existing tenants there that are expanding. And then, so there's not a tremendous amount of inventory, in those buildings.
No.
And then you had the big announcement with Moody's, right, moving to Brookfield Place, which will free up, 300,000 to 400,000 feet plus at Seven World Trade. But they, Silverstein is asking big dollars.
Yes.
120 plus. So they feel that, it's obviously newer construction. It's got great views. It's going to be a prime Class A / trophy block of space that will compete, with any Midtown location, because there's, as we know, there's just really not much inventory for large users in newer construction.
Yeah, I think it's interesting to think about it maybe from the perspective of a tenant who's in the market and still seeking to secure long-term space at favorable terms. Where can you go at this point? And we did an analysis of the data in the downtown market. And on a direct basis, we looked at and broke the market down to the World Trade Center buildings, the Brookfield Place buildings, and everything else. So 3 tranches, right? And on a direct basis, so excluding the sublet space, because you still have some of those Condé Nast sublet floors at One World Trade and some subleases, at the other Trade Center buildings. But if you look at it direct, the availability rate in World Trade, I believe, is around 5%, something like that. Brookfield Place, it's less than 8%. And then when you look beyond that to that third tranche, which includes, all your, downtown Class A type buildings, as well as the Class B and even C stuff, it's all in that 20% availability realm.
So big dichotomy.
Huge dichotomy.
So you have the users who obviously are well capitalized, can afford the rents of the World Trade Center. You still have plenty of users, in these kind of B plus, A minus buildings called Broadway and East, South and East, along Water Street. But there is a big differential in demand and rent.
Yes.
So one would think, as the World Trade Center and Brookfield Place continue to fill, their supply goes down, you would have to think some of this demand has to spill over into Water Street and, what's left on Wall Street, maybe 60 Wall finally, lands a big whale. You have to think 28 Liberty has performed very well.
It has.
And One Liberty, has a big block of space at the top of the building.
Right.
So you have to think that with the renovations to that building, they have to be next, to capture one of these, really big, fish.
I think that's where it leads you, right? Assuming that the demand will be there and the economic backdrop, remains relatively consistent. Yeah, I don't think anybody is announcing a full-time remote work policy at this point. So you figure the office demand will be there and it has to go somewhere if the space, especially the the size of space necessary for some of these requirements is not there at your World Trade Center or Brookfield Place building. So I tend to agree with you, and that's something that we're going to be looking for as we move further into 2026 is, just the flow of demand, this waterfall effect. Downtown, we've spoken about it a little bit in the past with Midtown, but really in both markets.
So, Midtown South continues to have robust demand. You have, there was a big lease just announced with PayPal.
Yes.
I think at 345 Hudson. That was in the works for a while. There's other tenants out there that are poking around, and again, whether they're coming, California-based that, has an important New York hub, or it's New York-based companies, it seems like it is very robust as far as, when we call around on spaces, they either have leases out, multiple proposals, even space that's not available for 6 or 12 months, which is quite different than it was 18 months ago.
Yeah.
So, and kind of just going back quickly to the co-working, even when we have some temporary requirements for our clients, we're calling the Industrious and the Convenes and Regis, and they don't have a ton of inventory. It's quite amazing. So I find that they have inventory, some of them, but it might not be in the location where we really want, or or the layout, or it's not contiguous. So I just find that when you feel and see that from every level, from companies of 5 to 10 people up to several hundred, it seems to be very well balanced, the level of demand.
There's so much to unpack on the subject of AI. I feel like we could probably spend an hour talking about just that. But when you think about not only the effects on the real estate market, but just how this technology continues to evolve and how people find new ways to leverage it as it continues to improve. Yes, it's affecting the office market. We see this sort of pipeline, but I'm just thinking about how, the versions of ChatGPT that we use and how the versions of Claude Code have improved. It just creates all these entrepreneurial opportunities where if you have a couple buddies or a group of 5 people and you have an idea, you can start employing these tools to pursue your idea, and then maybe you want a little 5 or 6 person co-working space to sit together and try to get your dream off the ground.
Yes.
And then that's how it starts, right? And then
Yes.
the ones that succeed, then eventually you start looking to, a longer term, larger home, and then it just sort of goes from there, right? As we've seen.
Definitely. We deal with clients of all stages, of their life cycle. So it's fun. And again, this is a total 180 from even 4 years ago.
Yeah.
We started to see over the last couple of years, but whether it was contemplating an office, people realize that there's more productivity being together for 98% of the companies. It's just better to have their employees, their personnel together, whether it's whiteboarding or ChatGPTing or and they're building their culture within an office. And an office, it almost feels like it could be as important as ever. So I know that might be a bold statement, but people care.
The data certainly seems to support that belief. We've, just because it's such an important topic to follow, we've been tracking AI-specific leasing activity, and we've been defining that in a relatively restrictive manner, just to not get too kind of ballooned out where you're saying, Google or Amazon or Meta is leasing space. That counts as AI activity. We're being a little bit more restrictive than that and just looking at companies that it's really core to the business proposition, if you will.
Yes.
But even with those guardrails in place, we tracked over 1 million square feet of AI leasing activity in 2025, which I was on a call yesterday with some of our other research leads from other markets, and they were floored by that statistic, because I feel like outside of maybe San Francisco, New York, and maybe a few other select pockets across the country, many markets, I think, are still in a position where there's this dream to be potentially fulfilled by AI.
Yes.
But here, we're really seeing it happen today.
Yes.
And there's just so much demand for space, especially in that market in Midtown South, as a result of this growth.
It's amazing to see. So I guess if there was 1 million square feet transacted this year, any prediction on what it could look like next year or this year?
I think higher. We were at about, approximating here, but I think we were at about 250, 260,000 in 2023 when it was really just starting to percolate. 2024 was about 500,000, and then we're up to 1 million. So this is exponential growth. We're doubling. Now, do I think it's going to double in 2026? Probably not as a personal prediction, but we are tracking about 1.4 million square feet of active requirements today, tenants actively in the market. So I have to think it will be another increase from last year.
I would say you're going to see at least a 50% increase, maybe double.
Yeah.
Because what I have found, we have a couple of these clients, is once there is a bit of proof of concept with their product, just like anything else, it's very important for them to be first to market.
Yes.
And so they invest heavily in scaling up, their headcount, their product, which quickly turns into more office space. So it happens very quickly, and the decisions are made quickly. The investors are supportive of it. So it will not last like that forever.
Right.
But I think, personally, I would be surprised if it's not double.
No, that's great insight, and it makes a lot of sense.
Yeah, so we'll see. What else should the viewers know, whether it's leasing or, the continuation of older stock coming off the market for conversion? That's also helping a little bit, taking some of that old inventory out. What else should we be mindful of or look forward to for 26?
Yeah, I think on the subject of conversions, we'll probably see that train continue to run, but maybe at a slightly slower pace than it has been going at, just as potential projects, run into some additional hurdles if it comes to, zoning or sort of perhaps even justifying a conversion to a residential use, which we've spoken about before, is difficult and expensive, but was necessary in a lot of cases when the prospects of leasing an office building were so bad. Yes. So, that calculus may change a little bit, and the pipeline may slow down on the office to residential conversion front. But I do think it will continue, especially in certain parts of the financial district, and there's definitely been a lot of activity over here in Midtown East. So I think we'll see that continue. I do think demand is going to continue to diversify and flow sort of out and down from the upper echelon to more commodity Class A buildings, well-positioned Class B buildings. I do think we'll see just more geographically broad-based activity throughout the market. Potentially even extending as far, maybe I'm getting a little ahead of myself, as the New Jersey waterfront and the outer boroughs, which have been very dead, for lack of a better word. There's really not been a lot of demand in recent years in any of those markets. But
although we just read about that lease at is it 25 Kent?
Yes.
In Williamsburg with Rilla. They leased 57,000 feet. They're a high-tech AI company. I don't know exactly what they do, but anyway, it was a very significant lease. That's with Global Holdings.
Yeah, so that could be a sign of things to come.
Yes. So I think that was a monumental lease there. But I agree with you. I think, whether it's the waterfront in downtown along Water Street and some of the infill blocks over to Brooklyn or over to the Jersey waterfront, one has to say that it's just, at the end of the day, it is supply and demand, and certain functions can be in certain pockets, and it's I think we'll see it. It might be more towards the end of the year or going into next year, but I think we're going to see it.
Well, as the market conditions tighten, there's no impending wave of super near-term supply that's coming to save the day. It's there are an increasing number of large, exciting development projects planned, but for the large part, the larger ones won't deliver until after 2030 or right around 2030 at this point. So we have a period of 2 to 3 years where if demand continues to be strong, there's not a lot of new product coming to market, especially in the core.
Amazing.
Till we surpass 2030. So, like we said, it may have to look elsewhere, or look beyond the usual constraints.
That's right. That's right. So we're going to sit down again in 3 months. We always have some really good tidbits, and it'll be interesting to see. We know there's a lot of carryover activity pending,
right,
going into this quarter. So I think 2026 shaping up to be a very robust year. It'll be really interesting to see if we surpass that 40 million square feet again, which would be quite remarkable. But even I think most analysts would say that we're going to be, if we don't surpass, we're going to be right there.
That's what I'm expecting. We'll be right in that ballpark.
So I think until next time, 90 days. Let's see what transpires. But we got a lot to look forward to, indeed, a lot of optimism, and I think 2026 is going to be a great year for a lot of people.
Should be exciting.
Matt, thank you again. To our audience and viewers, thank you for joining us, spending the time. We look forward to getting back with you in 90 days for an update. Until next time, thank you.